Welcome. Today we're covering valuation overview P/E versus PS versus EV/EBITDA, and when to use each. Let's get started. Valuation multiples are shortcuts that help you compare companies and assess relative value. They compress complex financial information into a single number. But remember, multiples are only useful in context. A multiple alone doesn't tell you if a stock is cheap or expensive without understanding the underlying business. Price to earnings is the most widely used multiple. It works best for companies with stable, predictable earnings. Watch out for one-time gains or losses that distort the ratio. Always compare PE within the same industry, since different sectors have different normal ranges. Growth companies typically command higher P/Es. Price to sales is useful when a company isn't profitable yet. Revenue is harder to manipulate than earnings, making PS more reliable in some cases. However, PS ignores profitability entirely. A company with thin margins and high PS may be much more expensive than it appears. Use PS alongside margin. Analysis. EV to EBITDA is helpful when comparing companies with different capital structures. Enterprise value accounts for debt and cash, making comparisons fairer. EBITDA approximates operating cash flow. However, EBITDA ignores capital expenditures and taxes, which are real costs. Use this metric alongside others, not in isolation. Each multiple has blind spots. PE fails when earnings are cyclical or negative. PS misleads when comparing companies with vastly different margins. EV/EBITDA understates costs for capital-intensive businesses. No single metric works for every situation. Good analysts use multiple approaches and understand each one's limitations. Choose valuation metrics that fit the business you're analyzing. Always compare within appropriate peer groups. Use multiple metrics together to get a complete picture. Remember that multiples are starting points for analysis, not final answers. Context and business understanding determine whether a multiple is actually informative.